Yet another weekly candle has closed for Bitcoin. In today's video, we are going to be discussing what this weekly candle close means for the market, whether or not we are going to see a bearish continuation down, or will the buyers step back in and finally reverse this multi-week downtrend. We are going to be doing a complete technical and structural analysis, going over a variety of indicators on a variety of timeframes, discussing exactly what is happening and what is likely to occur in the upcoming week. We'll be discussing upcoming economic news, Bitcoin's price action, the total cryptocurrency, and even the total altcoin market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. Before we get into it, make sure to go ahead and also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can find out more information by clicking the pinned comment of the free channel, contacting our admin by clicking this name over here, or you can go ahead and also find out more information via our membership detail link, our trading track record, our 10-minute video showing you inside the VIP channel, and much, much more. Check it out. We'll love having you in there. Let's jump on in. So guys, the weekly candle has officially closed for Bitcoin, and we have got a lot to discuss. This upcoming week is going to be jam-packed with news events from CPI data to even building up into, of course, our major economic news, which is going to be that interest rate release. We're discussing that in today's video. All of this happening within the next 10 days with a lot going on. In terms of our key levels, Bitcoin is still consolidating underneath that major $112,000 horizontal resistance and the 113.5 to 113 prior lower high. We'll be discussing these levels in our analysis today. Looking at very briefly the weekly candle close. In terms of Bitcoin, the weekly candle close was neither bullish or bearish. We had seen a little bit of pushback toward the upside during the week, a rejection from the weekly opening of the prior candle, but overall the weekly candle has still closed under 112, which is the prior break of structure, signaling that this downtrend is very much still currently intact. Will that change this week? That is something we'll be discussing. In terms of market data, 24-hour volume is up 10% at 154 billion, still actually relatively low. Liquidations up 18% at 140 million. 50 million coming from longs and 89 million coming from short positions. Moving over to the DXY, not too much change, very much waiting out to see how that upcoming economic news is going to be. We can see some larger daily and weekly candle wicks toward the upside over here, but mostly these candles are closing very small, with the opening and closing price being very narrow, signaling a degree of indecision over here. So again, waiting for the upcoming economic news. The S&P 500 is really attempting to absorb that selling pressure, pushing back upwards over here. We can see on the RSI we do have a respectable downtrend. If this downtrend is able to break upward, that would signify that the momentum that has been developing within this period of price action has absorbed. At the moment, we do have a rising uptrend against a downtrend in the RSI. This is a classic bearish divergence. This signifies overall exhaustion in the uptrend and potentially could develop into a correction. Now, for that correction to initiate, we've said already, we need to see a break of this uptrend. So we're still watching for a breakdown the uptrend, with the bearish target being 6,250 if the uptrend were to break. Now, if the buyers can continue to attempt to absorb this selling pressure, we may see the momentum flick back positive. If we see the downtrend in the RSI break, that would signify that this uptrending resistance will likely be tested and potentially broken upwards, and if so, we will see the next leg upwards. So we are pushing into a consolidation over here. This upward ascending wedge formation, almost like an ascending wedge formation. with, of course, bearish divergences at the bottom. If we were to flip this chart, you would see this to be some sort of a falling wedge pattern. Again, generally we'll look for 5 tests, so we don't really have a falling wedge pattern. It is close to a falling wedge pattern because, again, it doesn't fulfill the 5 tests rule. We look for at least 3 and 2. We haven't quite got that perfectly. And of course, we can see in the RSI the potential for that breakout to income. So watch out for this one. Again, it is going to be heavily dependent on how the upcoming economic news develops. If we do see a breakdown, that is the trigger for corrections. If you want to watch for continuations upwards, we do want to see that RSI break up, and that would likely be the trigger. Let's go ahead and jump into Bitcoin. Like we said, total cryptocurrency and altcoin market. We'll be taking a look at that. We'll be taking a look at the daily chart, going over how this consolidation is developing. Are we going to go up over here, or are we going to continue back down into support? We'll be taking a look at a few technical levels on the daily, on the 3-day chart, and even on the weekly chart. So we're going over absolutely everything you need to know. And then we'll also be diving into the 4-hourly chart, discussing the short-term price action. So pretty boring price action Bitcoin, not going to lie, it's not too exciting. But of course, it is still going to be very important and interesting as we are still failing to get above this critical point of resistance. So the downtrend is still very much intact. Now, before we get into our complete analysis, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll also go to support me making this content on a daily basis. And of course, you'll support yourself in your trading journey, trading exchanges I use and I personally trust. Go ahead and check it out. We'll play an ad and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's go ahead and get stuck in. Let's start on the total cryptocurrency and altcoin market cap for today's video. The weekly candle close has just occurred. Now, taking a look at the total cryptocurrency market cap, guys, we can still see the major points of support we have been watching over the past few weeks are still thankfully holding as support. Now, those 2 levels are going to be the diagonal uptrend, represented by, of course, this uptrending diagonal trend line, and the horizontal level represented by a gray box at 3.65 trillion. That point of confluence, so the 3.65 trillion and the uptrend, are the 2 major points of support where we need to sustain above. If we drop below specifically those 2 levels, we will likely see an extended correction into the break of structure at 3.5 trillion, and we also run the risk of a further correction into around 3 to 3.2 trillion, which is this major area of liquidity, that 50 EMA as well. Now, that is worst case scenario. Now, for that to happen, Bitcoin will have to fail to get back above at least 112, but ideally 113 to 113.5. And I will discuss that in our Bitcoin analysis in just a moment. But when we're looking at the total cryptocurrency market cap, again, it is a general indication of the health of the cryptocurrency market and the overall direction of the cryptocurrency market. Now, we're looking at why the total cryptocurrency market cap has held up a lot better than Bitcoin. This is as a result of Bitcoin dominance having been dropping ever since the top in July, ever since 124K, we've seen Bitcoin dominance drop. And of course, the total altcoin market cap holding relatively well. Now, that is a combination of, number 1, potential upcoming interest rates, and number 2, being an environment now which is more speculative and actually more hopeful. We're seeing a lot more hope in the market as Bitcoin dominance drops, as altcoins get a bit more of a bid, and as the interest rate drops, potentially become more of a reality. We're seeing more speculative environments, and these speculative environments breed a situation where Bitcoin dominance generally does pull back, and we see money flow back into the altcoin market, Ethereum particularly, which is more of a speculative asset. So with that, we can see Bitcoin on the weekly chart has already broken the weekly uptrend, has already dropped below these prior lows, has already retested and actually dropped below that break of structure on the weekly, but the total cryptocurrency market is still sitting above these respective levels. So overall, that's the good thing. It means there is still a degree of demand in the cryptocurrency market. Although Bitcoin has been coming down as an individual asset, the cryptocurrency market still has hope. So while we have these levels of support, there is a chance we do see strength come back in and the market push back upwards. But for that to happen on a broader scale, for us to really see continuations into 3.95 and potentially into 4.2 trillion, which will facilitate the altcoin market pushing back into these November 2024 highs, we need to see Bitcoin reclaim these key levels of resistance in the short term, which we'll discuss in our short-term analysis. So that is the altcoin market and the total market. Let's just quickly say one more thing for the altcoin market. The altcoin market has been holding very, very well. Now, the key level of support we are watching is the $1 trillion level. You can see if we go down to something like a daily chart, you can see just how much that 1 trillion support has acted as a key level. In fact, we had support for around about a week and a half to 2 weeks over here. We have then broke below, acted as a resistance for about a week and a half, and has been acting as support ever since the beginning of August. So looking around near 2 months of support at 1 trillion. If we drop below 1 trillion, we will likely see corrections back to 940 to 920 again. For that to happen, Bitcoin will need to drop down, and we will need to see the total cryptocurrency market cap lose these respective levels of support we just discussed. In terms of continuations upwards, we do have a potential bearish divergence. Well, we do have a bearish divergence. It has been developing, but we are also absorbing that selling pressure over here, as we can see by the put price defending that $1 trillion level. For the altcoin market to initially continue upwards, we will need to see the momentum flip positive. Now, I say initially continue upwards because a momentum shift on the RSI is not going to be enough to not only just push the altcoin market, but sustain the altcoin market. We will need to see that happen in conjunction with Bitcoin also breaking resistances. So watching those levels. Let's jump over to the weekly chart for Bitcoin, and then we'll jump into the short term. So for the weekly candle close, not too much happening here. Now, the weekly candle, we are ideally watching for a close. Let's go ahead and bring a little rectangle out here to make it more visible. We are ideally watching for a weekly candle close above this 114,000 level if we're looking at weekly candle closes, which would mark the end of the downtrend. So in terms of our daily levels, our short-term levels, these levels are going to be slightly different on a horizontal scale. But when we're looking at the weekly chart here, we are watching prior levels of weekly supports, okay, so range lows of support, not wicks, body closes of the candle, as potential points of rejection and, more important, trigger points for continuations, which would signify the sellers have exhausted. So when we're looking at this level here, we are watching a close on the weekly back above that region. We can see prior instances such as a range low over here, which we did close a weekly back above, which triggered, again, strong continuations upwards. So these weekly range lows and range highs can act as key reversal points. For Bitcoin to close a good weekly candle, we would need to see a weekly candle above 114. By doing so, it is highly likely we then see direct continuations back upwards. While we remain underneath 114, we do run the risk of continued corrections downward. Again, if we're looking at the higher time frame charts here, we can see we have had multiple signs of bullish exhaustion and bears stepping in, whether it be the breakdown in the RSI, which happened weeks ago now. In fact, it happened all the way back in the mid to late July. We are actually down a considerable amount since then. We're down around 10% in the price action since that negative momentum shift. We've also had a breakdown on the 62.09 2 weeks ago, 2 full weekly candles closes ago, and we were down, we dropped around 6%. We're currently down around 2.5% since that. Again, if we look at the overall trending momentum taking from prior highs, we are actually downtrending on that. So we do have the potential for corrections to occur to the 50 EMA and the Gaussian channel upper band. The risk of this downtrend continuing is still active. Okay, when we see sideways consolidation after downtrends, that is not enough to signify that buyers are back in. All that is signifying is that the buyers are actually jumping in to try reverse the trend. But trying to reverse the trend resulting in sideways consolidation as there is a degree of selling absorption is not the same as the trend actually being reversed. And we have to make clear distinctions between those 2 points. Otherwise, you end up longing every single short-term rally into resistance before you just get dropped on again. And we've said many times, we'll say it again, for us to be confident that the downtrend is over, we need to first at least see a prior lower high break and close as resistance. Now we can break this down in many more levels, but let's start on the short term and then build it up to the higher time frame. So we'll look at the short term chart, guys. We've got a very clear point of resistance in which we will need to break above to be confident, and not just break above, we need to maintain above to be confident the price will continue upwards. This is going to be the point of resistance represented by the upper gray box at 113 to 113.5. We're going to go ahead and circle it. If you can't see it, it is this point over here. We can see we have had numerous rejections from this point of resistance. Number one, okay, we have actually bounced, we came back up, and we had that first initial leg down. We've pushed back in, we rejected yet again. We came back up, we rejected yet again. We've had numerous rejections from this point of resistance. This is a critical point for the sellers to defend and a major point the buyers will need to reclaim if we want to see the price push upwards. Now, if we are able to get above here, it is very likely we push back into the POC, which is 118,000. Now, if we see that happen, yes, the altcoin market cap will push upwards. Yes, the total market cap will push upwards. Yes, we will likely see a weekly candle close above 114, invalidating the downward move. So that would completely change the trend. You can see how breaking above this level alters the expectations on the weekly chart, because that is when we actually see a reversal in the trend, not just sideways consolidation and a degree of weakness being shown by the sellers. So if we want to see the buyers get back in, that is the point we are watching. Now, when we are zooming out a very small amount to the daily chart, we can see on the daily chart that we do have an attempt for the buyers to get back in. We are seeing already momentum is beginning to push upwards slightly. We can see on the RSI and the market FOB, but we are still underneath 0.0, which signifies that although momentum is climbing, this is still negative momentum. We still have negative momentum. What we have here is weakening negative momentum, and that translates to essentially one of two things. And one, the sellers beginning to exhaust or the buyers beginning to absorb. And this is kind of the same thing, right? It results in sideways consolidation, particularly after downward moves. It is essentially signaling to us that we have this period of horizontal consolidation here where the market is deciding, is battling, is deciding which way it is going to spill over. Of course, the upward break being the trigger for continuations and the sellers being eliminated, and the downward break being a trigger for continuations down and the buyers being eliminated. So we have to look at it like that. We are not in definitive short-term trends right now. We are in sideways chop and consolidation, where a battle is occurring between the buyers and sellers to determine which one will be victorious. When we are looking at the higher time frame, we are very much in a clear downtrend that is very evident, and that downtrend is going to remain intact until we invalidate the downtrend, which will be breaking through these prior levels of resistance, as we just discussed. When we're looking at the daily chart, we can also use the 50 EMA and the 200 moving average as mean reversion trigger points, meaning we could expect while below the 50, the price will revert back to the 200, which is around that $105,000 level. This is a logical target with the POC. And if we break above the 50, if we maintain above, could be the trigger for the trend reversing, as that would also line up with the point of confluence at 13.5 to 13,000. So it all starts to begin to make sense and line up as we speak there. Moving over to the 3-day chart, we've talked about the 50 EMA on the 3-day chart being a key support. Again, losing the 50 EMA is going to be what is required if we really want to be confident. You know, when is the probability is so much in favor of the next leg down? Well, that happens when we lose that 50 EMA on the 3-day, and when we see the breakdown of the 34.34 on the RSI on the daily. So if we want to see this horizontal consolidation come to an end in favor of the sellers, right? In favor of the sellers, that needs to happen. We will see corrections at least to 105, potentially to 100 to 98. Worst case scenario. If we want to see it in favor of the buyers, well, then we need to break above the 50 EMA on the daily and the 113 to 113.5 resistance on the 4-hourly, which we've shown you, okay? So those are the two things we need to see. Now, when we're looking again at the 3-day chart, let's just go back to the 3-day chart before we wrap up the video. Again, the 3-day chart, if we're looking at the 34.34 on the RSI, it has also acted as key points of support through the entirety of this bull run. So again, looking at when the bull run started all the way back in 20,000, that's kind of when the bear market ended, the bull market started around 31,000 and above. You can see we've retraced back to the 34.34 numerous times in this bull market, bouncing every time since. And usually when we retest this point, we're doing so very close towards the 200 moving average, having not retested, but we're at least under the 50. So again, if we do see that continuation, that is a point we are also watching on the RSI. So thank you for tuning in, guys. Have a fantastic rest of your day. It's a wait and see week. It is literally a wait and see week. We have to see how the economic news comes out, how the market reacts, and then how these key levels are responded to. If we break above, that is bullish. If we don't, and we see continuations back through as lows, that is the trigger for strong continuations down. So it's really just a battle between the bulls and bears. Volatility is drying up, volume's drying up, the market's getting ready for the economic news, and I do expect that volatility to start to pick up very soon. So thank you for tuning in. Have a fantastic rest of your day. I'll catch you guys in the next one tomorrow. See you then.